Hello, my name's Todd Lees, Managing Director of Lotema Brokerage, and welcome to our cereals and pulses market update. Well, it's springtime in Australia and the market environment and sentiment is certainly very different to what it was this time last year. We've had a very dry winter with little rain received throughout the Australian cropping belt, and production estimates for all crops are significantly lower than what they were for the 16-17 season. ABARE has revised their wheat production estimates down to 21.6 million tonnes, while the rest of the trade are probably now around the 20 million tonne mark and some even lower than that. If decent rain is not received in the next 2 weeks, rest assured both those parties will be revising their numbers downwards again. Desi chickpea production estimates are also constantly being revised, and it would be fair to say that most of the trade believe it will even be a challenge to reach the 1 million tonne mark this year. In Australia, September is usually a month where average crops can be turned around with a decent rainfall and actually end up producing quite good yields. Unfortunately, the forecast for rain is not that positive for September, and the chances for any pleasant yield surprises are diminishing daily. The Desi harvest has started in central Queensland with about 5 to 10% of the crop being delivered so far. It is really too early to provide any definitive comment on quality, but we have heard some anecdotal comments saying that the crop quality is looking quite good. Crop colour is looking quite good. To the markets across the board, all commodities are maintaining high prices, primarily due to the fact that farmers are simply not selling forward. In a dry year like this, where we have also experienced several severe frost events, yields are highly questionable, and farmers will wait until they have their crop in the bin before they commit to any forward sales. Also, supporting prices is a very strong stock feed demand on the Australian east coast due to the very dry conditions. Cereals and high protein pulses like faba beans are being transported from the south to the north purely for livestock consumption. Surprisingly, it is highly likely that we may see a couple of bulk shipments transported or loaded and moved from South Australia, Victoria to Queensland this year. Price indications, APW is indicated around $245 US dollars East Coast FOB basis. Desi chickpeas are at $870 October-November to the subcontinent. Kabuli chickpeas, if you can get an offer, which is very difficult to get, maybe around that $1,100 per tonne level to the subcontinent. Nippers and nuggets at $545 November-December, and faba beans surprisingly at a $330 to $340 CFR Egypt Red Sea level. And remember, these prices are high purely because, well, on the back of very, very limited grower selling. Well, that's it for now. Thank you for listening. Have a great weekend, and we look forward to catching up again next week. Bye for now.